Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. We've been looking for corn to toggle back and forth between support and resistance through the end of the year. That appears to be exactly what is occurring. Most recently, we've seen the highs come up to 362.5. We found very good resistance there, and the market has been moving down. And we're now approaching potential support, which sits at 343 3/4. As the market makes its move down, it's also making its way down to being oversold. And we'll notice here pretty consistently each time that it's hit overbought or oversold, the market's been able to make a nice move in the appropriate direction. Where we saw it was overbought, it dropped down to support, and then it moved back up again to resistance. We saw intermediate support at the 353 level, where it came right back up again to that 362.5, and then this time the market is making its way down, and it looks to touch that 343 3/4 number. If it is much weaker than 343 3/4, we do not expect it to go much lower than 334.5, but in all likelihood, especially as we approach the Christmas holiday over the next couple of days, 343 3/4 is probably around the area where we should see the market make a pause. Last week, we shared how December 15th could prove to be a turning point or a pivot for this market. And as we can see on the chart, this was a high volume down day, which was only one day away from the high close day the previous day, which was only one day beyond the high close date the day before. As we can see, the market has since moved down to support at 347.5, which happens to be a 50% retracement of the range. We have potential support at 342, and this is where we would anticipate, again, the market finding some good support as it has been moving down the last 5 days or so. This time of the year is both a low volatility and low volume time, so it remains to be seen how much strength this market will continue to have to the downside and how well support will in fact hold. Jan beans finally broke through support at 1018 1/4. And as we can see, the market really had a big down day yesterday, and it had two subsequent double-digit down days over the past couple trading days. Today, we find a little bit of support, but it remains at the low end of the trading range, and we're looking for support to come in at the 360-degree level near 986 3/4. And below that, we're looking at potential support at 955.5. In all likelihood, given the convergence of several indicators, we think that the 986 3/4 to the 986.5 area should hold going into the Christmas holiday. March beans has also been under pressure. That key area of support for it rests in the neighborhood of 1003 to 1004. Here we have both a 360-degree demarcation level as well as a 78.6 retracement level. That area also coincides with what looks to be the market becoming oversold. So as the market makes its way into this area, this is where we think the market has a very good chance of pausing and perhaps turning up or at least moving sideways through the end of the year. We have previously shared about the speed of the market, and here we can see the market is doing a very good job of tracing this downward sloping trend line, and you can see the market is holding it very well on the way down. Look for the market to continue moving down to perhaps the end of the year, at which point we can find some good support, and that support once again perhaps lies near the 1003 to 1004 area. After touching resistance at 419, wheat futures has really been struggling since then over the last 6 trading days. Over the last 6 days, the range reach actually has not exceeded the range the previous 5 trading days, which tells us that there is the potential for a little bit of strength, but the key right now for wheat continues to be the region between 386 and 395. As long as this area is able to hold through the end of the year, there is good potential for the market to turn back up. Upon breaching into this zone, especially should it break the previous low from December 1st, this is going to be telltale for this market to potentially breaking down, especially if it breaks below that 385 and 3/4 number. Below that area, this market is probably in store for some great weakness. And so we want to be very careful here as we approach this key region of 386 to 395. Intermediate support rests in the range of 400 to 402, and that's exactly the area that this market is struggling with right now. It also happens to be volatility-based support, the bottom end of that range. So as the market has come into this zone here, the ability to turn back up near our projected pivot turn timeline should be very key. So over the next day or so, right before Christmas here, we'll look to see if this market's able to make its way back up over the next couple of days, or at least move sideways and to pause what has been a pretty consistent downward moving progression over the last 5 days. To close, we'll have a look at the March crude oil futures contract. Here we can see the 5-wave Elliott sequence that we had discussed previously. The market came into its own and made a very nice top after a 5-leg move. We're looking for a potential ABC correction, and it looks like our B leg may have topped out just shy of that $55 mark, or very close to that number. It looks to be on its way back down, and we're looking for support to come in near $50. If that were to occur, this would be a nice opportunistic area for an entry should support hold near that $50 mark, for the market to make another rise and for that move to be somewhere in the neighborhood of the distance traveled here. And so what you'd be looking for is for a very nice move to the upside from this support that comes up, and you would see a move that matches this previous leg here at a bare minimum. In doing so, we're looking at a move at least to about 60 to 61 for the crude oil contract. Again, the key right now is to whether or not we're able to make its way down to support, find good support, and then be able to turn up from here. Thanks once again for joining us for our weekly market update. This will be our last update for the calendar year. Hope you have a fantastic Christmas and a great New Year's holiday as well.